Guys, what's going on? My name is Ryan. I trade ETFs, and I like to make videos about the technical analysis that I'm seeing in the market. Today we're only going to be doing GDX and gold, the commodity itself. I haven't done a GDX and gold video together, and I think it is fairly interesting to see how both of them act and react to each other. Also, we're coming up on some key levels, and I'm seeing some interesting things here in the charts. So let's get down to it. First thing here on the daily, we've got this goes from 2011 to current day. And we can see the 6-year resistance here has acted as very strong resistance for us. You can see this more medium to long term. I guess it does start in 2016. Support that has supported us once, twice, and 3-4 times now. So this is strong support. And we can also see this kind of horseshoe pattern that I drew, a month ago when I first started doing these videos. And I like this horseshoe pattern just because it kind of shows direction off of a bounce. So what I mean by that is we kind of come down and we bounce up, and then we would kind of fall back down in the same manner and direction that you would expect from a bounce right here, all the way back down here, and then the straight fall down, and this lower sloping wedge, we kind of move sideways. We hit this top, we bounce down, we come up here, and we get rejected here, and we bounce further back down, and this is where we are at today. Just wanted to preface that this horseshoe is nothing other than a theoretical curved line that I drew. It's not a part of technical analysis. I just like to look at things that I see in the market, and I can definitely see that there is this curvature that's going on here. So let's go down closer to a time period that's relevant, and that is today. So we can see right off the bat that these two support and resistance lines, long-term support and resistance, are forming what I originally thought when I first started making these videos to be a pennant here. I thought that this was a part of the pattern. I've since rejected that idea. But what I thought we came up here, we came down here, we set our A, and then I thought we were going to go here and set our B, C, D, E. Instead, we've come into what I now think is the correct pattern, this descending triangle. So we come all the way down, and then we rocket on up. We set our first resistance line, set our first support line. This is our A, B, C, D, and E. We will get to that in more depth on the lower time frames. But what I noticed for the first time here today is a hidden bullish divergence here in my CCI indicator. And this is very interesting because I use divergences a lot to predict when the end of a trend will come, and I find them very useful in my trading. So I know that it might sound like a lot of hoo-ha to some of you guys, but there's such a thing called a hidden bullish divergence. And that is when price is trending up and we set a higher low in price. So the price is going one direction and the lows are going one direction, but the CCI, which measures momentum as well as support and resistance zones, this is our trend and entry CCI, slow stochastic RSI. So our price makes higher lows and our CCI makes lower lows. And here is a picture of a divergence cheat sheet that I just pulled up from Google, and this basically walks you through all the different kinds of divergences. And I primarily rely on the regular divergence and the exaggerated divergence, just because they are much easier to spot. However, I did notice this hidden divergence. Here we have the bearish divergences, and over here we have the bullish divergences. We are looking at this one right here in the middle. So our price came down, we had our low, we had a high, we had a higher low. Over here, our stochastic came down, we made a low, a high, and a lower low. So this is the concept of a hidden divergence, and I think that we see that right here as our CCI moves down and our price moves up. So that might be something to keep in mind while you're trading. Here on the 2-hour chart, we're getting to a shorter time frame here to discuss some things here on the 2-hour. First thing I wanted to mention is we have our time here. I just draw it from a major high here to a major low here, and it spits out equidistant time barriers, which I've found useful as of late. So we can see that we have a major high, a major low, and another major low. Major low, kind of a major high for this pattern, and our next one comes over here, which conveniently lies close to the apex of this symmetrical triangle that I have drawn here. So this just kind of shows my original assumption of the symmetrical triangle. I thought that we came up, came down, set our A, B, C, D, and this would be our E. However, like I said, and we'll get to this on the 1-hour chart, I have since rejected that, and I think that this makes more sense to be a descending triangle. So here in the 1-hour, let's get into some of what the descending triangle is. Again, just so you can kind of follow this chart, I have drawn these time periods. I drew it from a major low to another major low, and I expect this to be our third major low over here, just because that's kind of the way that this indicator works. But the description of a descending triangle is that volume should recede 83% of the time, and if it does not and it slopes upwards, the pattern performs better. I wouldn't necessarily volume is sloping upwards, nor is it declining necessarily, so you can ignore this. Our breakout typically occurs 64% of the way to the apex, and the most powerful breakouts occur 80% of the way. So our apex right here, this is when our support and resistance lines converge on each other. This is our apex point. It's saying that 64% of the way is when the typical descending triangle breaks out. And how do I know that this? I've marked this with this light blue arrow here. This is our 64% move from our apex. And how do I know this? Well, I drew it from our top here, our first resistance zone, all the way to our apex over here, and it was 1456 bars. And what I did is I did 1456 times 0.64, 64%, and that spit out 932. Came back over here and drew over this previous length drawing, and I drew it all the way out to 932 bars. So we can expect some interesting things to happen over here, and we can also notice that it's close to this time fib as well, which is interesting. Going back to our description, continuation, prices that rise into the pattern break upwards 73% of the time. So we have this long downtrend here, however we bottomed out pretty hard and we skyrocketed on up. So I would count this rise because this is our main support line and it's above the bottom. I would count this as a rise into the pattern instead of a fall into the pattern. So this says that it should break upwards 73% of the time. Trend, look for triangles with upwards breakouts near the start of an uptrend. I would like to assume that this is the start of an uptrend, and therefore our trend description, the trend part of our description, should be valid. However, nothing has occurred that would confirm nor deny my prediction that this is a descending triangle. So until we have a breakout upwards, this is all just technical analysis. So as far as our descending triangle goes, we have our support resistance. We come down, set our A, B, C, D, and E should be right here is what I'm predicting. And as far as price goes, you can go to my last video. I drew this blue line here. I said that I had a feeling that we were going to bleed all the way down here into E. We might see a minor pop up here once or twice, but ultimately we will come down to this prior hard support area down here. The rationale for why I think it will bleed is, well, if you look at the prior two times that we came down here, we kind of, all out dump, and then we just kind of bled all the way into this level before we saw any impulse waves up higher. Again, over here, we kind of all out dumped, and then we had a couple small pops, but then we ultimately bled all the way down here. I think that we are seeing a very similar thing occur over here, and I think that we will bleed all the way to E. So from a short-term to perhaps medium-term perspective, I would say that I am bearish on GDX. Again, everything that I'm saying is bullish. I had an individual tell me that, I'm saying in my videos that I am both bullish and bearish, and that way I can cover all my bases and be correct still. That is absolutely not true. I've, said when I'm wrong in all my videos, and I will continue to do so. But I did want to specify specifically because he said that for the short term, meaning, days and intradays, and the medium term, meaning 5 to 15 days, I guess I am bearish until we start seeing some major volume and moves upwards. This E here comes towards the end of June, beginning of July, and therefore, being that it is the 20th today, I think that we have a few more days of downside to go. Long term, I am bullish. So let's get back to the chart. We come in here, I had this nice video. I thought that we were setting a descending triangle just because, a lot of people were calling the top right here, which was very close to the top. They were calling the top here, and they were saying that it was going to break downwards. I theorized that, in the past two times we had this kind of stall out pattern, choppy action right here in the middle. We had this choppy action right here before we shot up to our ultimate high. I kind of thought that the same thing was going on over here. Also, we hadn't touched the previous resistance of this line. But as we come up into the pattern, it's a descending triangle within a descending triangle, I know. We come down, we set our A, B, C, D, E. We break out, we have a false breakout, we fall back into the pattern right by our apex, and then we shoot up higher. After we came up here to our D on the larger time frame, we saw a lot of profit taking, and now we are consolidating and moving downwards as a continuation of the larger picture. So that was the hourly chart. I just got the 30-minute left here. Actually, let's go to the hourly chart again. I saw some divergences down here. So let's go back to our divergence cheat sheet. This is a bullish divergence that I'm seeing, and it's a regular divergence. Price comes down, and we set a lower low, while our indicator comes up here and sets a higher low. This is a regular divergence. We see over here in our CCI again, we have a low and a lower low. And in price, we have a low and a lower low. But in our indicator, we have a low and a higher low. Another thing that supports this fact is that our RSI level has continued to remain flat throughout this entire downwards move. So what our RSI remaining flat is saying is that this should be close to the bottom. We're nearly oversold at this point. The price is saying no, we're going to continue going downwards. And our volume indicator is saying that bears are taking some profits as we go up ever so slightly. Okay, so for the 30-minute, again, I did a measured move here, A to B, and pulled it down here to our point of breakout, and it came up here pretty perfectly to our exit price at D. So why is this an important point in time? Well, this 2-year resistance line that I have drawn here and bolded in dark black is coming up here, and I think that this is major support here as far as price goes. And I also I'm interested in seeing if my original prediction that this is a symmetrical triangle or if this is a descending triangle is true. So I have both drawn out here. This is our support line, and we are touching it right now. Another thing to note is that our support line for a descending triangle comes down here just slightly lower, about 50 cents or so lower. I'm interested to see if we are supported here by the 2-year long support line, or if we're going to break through this and be supported by the 5-month long support line. Another interesting thing is our Fibonacci. I always like to draw these. So I dragged it from right here all the way up to our top right here, dragged it out sideways, and it spit out these Fibonacci support and resistance lines. So it looks like we fell down here, and our next support line would be, our next technical support line would be down here at the 23.6 area, right around the 21.60 price for GDX. Again, I haven't drawn them out, but we can see our price is moving downwards while our RSI is moving upwards, our stochastic is moving upwards, and our CCI is moving upwards. One last thing to note here in the 30-minute, and this is for the technical analysis nerds, is that these previous resistance lines and support lines come into play even after the pattern is played out, and I find this extremely interesting, but I can't find any research on it anywhere, and I think that they continue to play a role in that I just continue to drag this, and we see that we are starting our descent on this level we are walking down it. Also, the support line right here, you could make the argument that this was the 61.8% fib line. You could also make the argument that we were within 8 cents of this previous support line before we saw this minor pop here in price, and so that's just a small thing. Last here on the 15-minute here for GDX, we can see that I've drawn that this is now resistance. This previous support line is now resistance, and I have a couple targets that I've set, and these are unmoved from my last video on Sunday, as well as these blue lines. So this is my first target. I actually bought some GDX today once we came down into this zone, and I plan to accumulate more shares if we drop down here to target 2. The reason I'm not going to be adding shares here in the middle is because there's no support really here in the middle on the way down. It only really makes sense for me to accumulate shares here on hard support because price likes to migrate to the ultimate highs and the ultimate lows. So as far as these blue lines go, I am expecting us to come down here and set our E, shoot up, hit resistance here, flag out, and then break this long-term resistance. The reason that this flag at this point is important is that in previous times, we can see that we were basically immediately rejected off these levels. We basically have a V-top, and we just shoot back down. It's important for us to get up to this level and hold it for a little while. Show some strength from the bears. If we get up here and we just shoot back down, I will change my opinion to bearish, and my descending triangle pattern will have to be changed. Another thing as far as my indicators go, these purple lines right here are all descending as the primary bearish trend continues on. I'll be looking for all 3 of these to break this at some point, and with this hard 2-year support line right here that I've drawn, my original symmetrical triangle, it's plausible to assume that we might bounce off of here and break these lines. And that would be a very interesting point in time to decide whether you are going to take a trade on GDX or not. Let's go to the gold chart. Let's go to the 1 week.